gives you an immense courage or the power. Financial planning is not just investing money in various assets. Hi everyone, welcome to this video. My name is Raghavendra. This video is all about the knowledge of personal financial planning. The purpose of these videos is to educate the people on the importance of personal finance in their life, the money mistakes of the people in their early career life, the importance of the time horizon once investment, and the meaning of financial independence. These topics are generally not taught in the schools and colleges. So I request to consider subscribing to this channel and watch all the videos always. So let me just share you some of the general information which you already must be aware of. The Indian population is around 130 crores. So out of which only 27% of the population is financially literate. That means we still have 73% of the population who are not fully financially literate. This is a very important information you should be aware. And we say there are 66% of this population, around 808 million, below the age of 35. So India has the world's largest youth population. This is not my statement. This has been published in one of the newspaper. Now, if you just imagine, if 50% of this population is financially illiterate, what would be the situation of India? Where India is going to become? Definitely, it's going to become number one in the world. So, our projection says that India is going to be the third largest economy in the world by 2029. So, this indirectly means that more and more jobs are going to be created, and more people will be having jobs in their hand. More and more people will be having the discretionary income in their hand. So when money comes to the hands of the people, so one should know how to handle it and how to grow rich. For this, the knowledge of personal financial planning is very critical. So if someone asks you the question, why this knowledge of personal financial planning is very important? According to me, the simplest answer would be to protect our financial future. So there is a famous saying that if you spend money today for unnecessary things, you may not have money to buy necessary things tomorrow. So you should be very cautious while spending today. So when it comes to future, you may need huge amount of money, maybe at least for these four reasons. First one would be to buy a house of your own. Second one would be for your children's education. Third one would be for your children's marriage. And fourth one, definitely it would be a retirement fund. So one thing you all must know, that you may get bank loans or to buy a house for your kids' education, for your kids' wedding, but not, definitely not for your retirement fund. Other important thing which you have to keep in mind is that first one is life expectancy of the people are going up in India. You must have already read that the average life expectancy in India has gone up to 75 years of age. If you retire at 58 and if you expect you to live up to 75, 80 years, you would need money to take care of this 20 years after retirement. Along with that, it is not just to meet the regular expenses. You also have to take care of your medical or health issues also. For that also you need a lot of money, because the medical inflation is really going up at the pace of 12 to 13% every year. It is the highest among the inflation. If you compare the general inflation, it would be around 6 to 7%, but medical inflation is above 11 to 12%. Now the question is, did you think of this? I have seen people saying, let us enjoy today, not to worry so much about tomorrow. And we are getting salary on a daily basis or monthly basis or whatever. But in the modern world, nothing is permanent. All of you cannot expect anything in advance. Your boss may come tomorrow and say, thank you for your services. From tomorrow onwards, we don't need your service. So what will you do? You could survive only if you have some money as a savings. Otherwise, it would be very difficult for you to survive or to take care of your monthly expenses. So before I move on, I request you to consider subscribing to the channel and also click a like button to this video so that this video can reach more and more people. And this will encourage me to create more and more contents on financial matters. When it comes to money, the silent killer is the inflation. Though inflation has got its own impact on your savings or on the value of money. What is inflation? Inflation is nothing but rise in the price of goods and services. So what happens because of inflation? The buying power of the money year by year it decreases. That means today if you are able to buy a certain thing at rupees 100, you may not be able to buy the same thing at 100 rupees maybe a year later or after 2 years. This is called the inflation. So when inflation goes up, the cost of living goes up. So inflation is the biggest enemy for all of us. The cost of the living doubles every 12 years if the average inflation is around 6%. So this means today, if you have 50,000 rupees as your monthly expense, this expense is going to double after 12 years. That means it requires 1 lakh to take care of your monthly expenses. There are many people who say that money is not important, relations are important. But you can say that only when you have enough money. Unless you have enough money, we cannot just focus only on the relation, losing attention on the money part. So when you have money, you will see your people coming to you, it can be your relatives, your friends, they'll be around you. But when they get a signal that you are in financial trouble, slowly some people will go away from you because they will feel that you may ask for some financial help from them. This is the reality. Please don't get offended. It may not be in all the cases, but definitely in certain cases it will happen. So please don't get loose in enjoying today. Please take care of your tomorrow's financial need also. So when you have money, you will have a different courage, self-confidence, and the enthusiasm and the feeling of a financially secure. You will be having a high morale. But when you don't have money, definitely your morale will go down. You will have no confidence in you. There will not be any courage in you, and you will become a yes master for everything, and you will say yes for the things even if you don't like to do certain things. So please remember, money gives you the confidence, the courage, and the high morale. So all I would like to say is money gives you an immense courage or the power. You must have already experienced it. Now the question comes, what are you supposed to do for your financial plan? One more thing you need to consider, financial planning is not just investing money in various assets. People say, yes, I am doing financial planning, so I am investing so much of rupees every month in the stocks. That is not the financial planning. To start the financial planning, what you need is again the money. Unless you have money in the form of savings, you cannot start your financial plan. For that, you need to do certain things first. First one is develop the habit of saving. This is the most critical, important step in one's financial journey. One can develop any kind of habits very easily. Within a day or two, people get habituated for certain things. But this habit of saving, it doesn't come that easily. It requires a real commitment from the people. Why this happens? Because to save money, you need to have a specific purpose. You should be knowing for what purpose I am saying. Unless you are not sure of the purpose, it will definitely not allow you to think of doing savings. Then it requires a commitment and the discipline, which generally is not an easy thing for everyone. So to do savings, you need to little bit alter your behavior towards the spending. So the second important thing or the second step is change your behavior towards spending. So generally what happens, once we get the salary, we start spending on the required or not required things, and finally we find that there is no money left to save. So we must forget the habit of income minus expenditure is equal to save. That is what all of us are doing. Most of the people doing. Even I was doing the same mistake, and you also must be doing the same mistake. So please forget that formula. So you need to change your behavior towards spending. That means you must adopt this particular thing. That is income minus savings is equal to expenditure. That means once you get the money in your bank account as a salary or whatever income, first you need to take out certain amount from that. Take it as a separate thing for your savings or investment or whatever. Then you start spending the remaining amount. That means you must plan your expenditures keeping in mind what is that you are supposed to be saving every month. So now the thumb rule for this savings is, generally you must have seen already, so many people are saying this formula, not just me. So generally people say thumb rule is 20% of your monthly income. That means, for example, if you are earning 50,000 rupees per month, then out of this you must keep 10,000 rupees as your savings. Then 40,000 you can look for the expenses. Now there is no rule that you should not be exceeding 20%. If you are saving percentage more than 20%, it would be better. Now using this formula, if you start saving or if you start investing from your early age, you will have abundant time for the investment to create wealth for your retirement. Example, if you are at 25 years, right now if you start your investment or the savings habit, you will have around 30 plus years to save. So this will create a huge corpus or wealth for your retirement. You may also think of retiring early. But as per my experience, this awareness comes only once you achieve your age 40, not before that. Even in my case, same thing has happened. Before 40, I was not much aware of the financial planning or financial instruments. Even I was not doing that much of saving. At the age of 40, if you look back and see, you will see nothing. There is no financial protection. You don't have any bank balances. You don't have any investments. There are no insurances for yourself or family. There's no own house. Nothing. We were just doing earning and spending, earning and spending. So by doing this, me or you would have already lost around 15 to 16 years of precious saving or investing time. So it would have been very easy for me or for you to invest or to save when the responsibilities were not that much, right? Responsibility towards the family I'm talking about. So but now at age 40, you have bigger current responsibilities, okay? Plus the future responsibilities towards your family also will increase, and you are also required to think about your retirement and so on. So now at age 40, you will have only 16 to 18 years to make your financial planning, and it's very difficult for everyone, most of us, to become very rich by the age of 58 or when we retire. However, this age 40 is not so late, but still we or you can make proper plans to achieve our financial independence at least by age 58. For this, I am going to give one example. Now, this example is like this. If you start to invest at least 3,000 rupees per month, that means INR 100 rupees per day, in a mutual fund at the age of 25. It means as soon as you got a job. So, and imagine that fund gives you around a 10% CAGR, that is compounded annual growth rate. So I am here little conservative. Generally, mutual funds will give around 12 to 13%, but still I consider only 10% as the interest or the returns. And if you continue to invest that till the age of retirement, the retirement corpus would be around 93.45 lakhs. Please understand, this one I am talking about at rate 10%. So this is called the power of compounding in the financial terms. So what you can observe in this is, you started investing very early and you are continuously investing for a long period or a great period of 33 years time to grow your funds. On the other hand, now if you are at age 40 and you start investing 3,000 rupees per month now onwards till your age retirement, means up to 58 years, you will get only 18.16 lakhs rupees as your corpus. Because you started late, the time horizon for investment was very low, and the time given to multiply your money was very small. It was only 18 years and not 33 years. You can see this in the screen. I've shown this in the table, the case 1 and case 2. The delay of 15 years has reduced the corpus amount enormously. So this particular thing is called in financial terms as cost of delayed investment. So from this example, you must have learned 3 things. First one is early to invest, because you will have a longer duration of time for investment. Second thing, consistent to invest. You cannot invest for 1 year, 2 years and leave the years blank. No, you have to consistently invest after starting your first investment. And third one is longest to invest. That means you cannot invest for 5 years, 6 years, and then leave it. Then you should be continuously invest for longer duration of time. Then only the returns will be good. You will get a very good CAGR. That is, you will see the magic of compounding. So these 3 are the keys to become financially independent and to become wealthy. So anyways, if you have not done this so far, past is past. At least from now onwards, you start thinking towards this direction and make your financial planning and attain your financial freedom. The next question comes, what is financial freedom? So in simple, it's a scenario. You are not dependent on your monthly salary anymore. You need not go to office every day and wait for the salary till the month end, sacrificing all your passions and dreams. So it is such a state where the assets you created or built over a period of time from your very early age should bring you the required amount of money or the cash flows to you on a monthly basis, on a yearly basis. That should suffice your all expenses. Maybe it can exceed your expenses also. So if you are becoming financially free at your early age, definitely it will be possible for you to pursue your passions. So do you want to retire early and pursue your dreams? If answer is yes, please go back and see what is that you have done so far, what kind of a financial planning you have done so far, what kind of investments you have done so far. So by the way, this channel's name is Kiladi Kasu. Why I have kept this name as Kiladi Kasu? Because money is very tricky. It is not very easy to make money. Of course, the value of money is decreasing every year by year because of the inflation, and the cost of every item has gone up. But at the same time, it is not very easy to make such amount of money by everyone. So this much is enough in this video. The next video I am going to talk about the pyramid of personal financial planning. That is going to be a very important video for you because I am going to teach about the various steps involved in the personal financial planning. So thanks for watching this. See you in the next video. Thank you.